Dan, that was my fuck up. I put a manual reminder in there because I've got so many calendars. I got my Checkmate one from Glassnode. I got my current one.
Right.
I put it in the wrong spot.
Either way, I was taking complete blame because I know every time we like schedule with anyone down under, like Daz, I constantly cannot figure out like the date, the time and date. Like it just eludes me completely. Like it's the most complicated fucking thing in the world.
Why can't I figure it out?
For Americans, because you guys are like, I'm literally I'm in the next day. No. You guys are like halfway through your day, and I'm in the morning of the next day. Coffee's already gone.
Yeah, you're in the future somehow that we don't.
It's weird.
Just cannot wrap my head around that concept. We're putting Donald Trump in jail now. We had him as a president. Like we don't know what the fuck we're doing.
Yeah, it is a shit show. I agree, though. I cannot figure out the Australian time change. This is probably our 12th episode, 13th episode with an Australian, Josh. Yeah. I can't fucking figure it out. And every single time we get it scheduled, I stare at the screen for 30 to 45 seconds trying to parse through it. And then
you count both ways and you're like, I'm pretty sure this is right, but I'm just never confident. Never.
No.
So when you popped in yesterday, I was like, God damn it, I fucked it up.
Yeah, you go to time zone, buddy. You try to work it out. It's like, what do you mean it's on Thursday? It's like, no, not Thursday. Your Thursday, my Friday.
Right.
It sucks.
Yeah, we also spent some time here a few minutes ago talking about audio equipment. The amount of time Josh and I have wasted with very little return hashing out our audio setup it's pretty adorable, Josh, if you really think about it.
It is. It's funny.
Proof of work.
But you know what? We finally settled on. I don't think I've fucked with mine in like 6 or 8 months. I just finally gave up. I was like, you know what? The minuscule return from here is not worth my time. And I mean, listen to this sexy baritone voice right now that I'm completely faking with. Like, I have like it's probably like 2 octaves lower than my actual voice right now. It's hilarious. Like the party.
It looks like Mission Command behind the screen where you've got all these dials and screens and shit going on.
Yeah.
Here's the temptation, James, when you get going with audio. And I think, Josh, before I get into this topic, we've maintained integrity. And hopefully people that know us in person
we haven't gone full clown, as we call it.
We have this phrase, Josh just shared it. It's full clown. You start with audio processing and you realize that you can have the voice of Morgan Freeman if you want. You can make yourself so deep in baritone that you can, absolutely tremble.
Dan actually uses auto-tune while we're talking on the podcast.
And there are some people that have done this. Fuck it, Josh. Let's call him out. We've stroked him off so much through the years. We're gonna call out Preston Pish. Pish's audio, I don't know whether it's him or whoever does it in post. You hear him in person. It's a wonderful voice, but compared to what he does on his podcast, he sounds like a frumpy bitch.
Yeah, I'm pretty sure he blew out a subwoofer in my truck is what he did.
So we had the temptation and we pushed the boundaries for a little bit, but then you realize like, no, because you don't want to go to a conference and then have someone be like, whoa, you sound nothing like this in person. So
has this guy gotten castrated recently? What happened to him?
It's tempting though. I'll tell you what. Yeah.
No,
James, how are you, man?
Wow.
Good, fellas. No, it's good to be here. Thanks for having me on.
We're glad we could make it to castration in the first 3.5 minutes.
You got
solid work right there. I don't know how that was on my list. We somehow wandered into it much, much quicker than I expected.
You're supposed to get to that in the back third, yeah.
Yeah.
I want to hear off the bat, if you would. You've made a little transition here. You've gone out on your own. Checkonchain.com, right? Is where a lot of your material is, and it's robust. Your research has always been top notch. Walk us through this recent change in your career and how you feel about it, and I guess direct people to where they can find you if they are confused.
Yeah, for sure. I mean, Check on Chain's been around for a long time, actually. I forget the actual block height, but it was back in 2019 when I actually started building this thing. And Check on Chain was essentially my reason to get off Excel, because when on-chain data first started coming out, I was downloading CSVs, re-uploading it to my spreadsheet, allowing all the charts to calculate. Like it was tough. This is back in my engineering days. So I've been looking at on-chain data, processing it, thinking about it for a long time, fascinated by it, right, ultimately. And the opportunity for Glassnode came along in February 21, pretty much at the top. And I actually wrote a piece the other day reflecting on because, February I start, May was when we had the major sell-off that pretty much started the bear market. So I had 3 months to work out what the hell was going on. And as you can expect, you get a lot of things wrong. So I did a bit of a self-reflection. And, I essentially went through the full bear market from all-time high all the way down, back to all-time high, and then down to the floor, back to all-time high. And once I'd gone through that process, I had achieved a lot of what I set out to achieve, which is I want to know what these metrics do. I want to understand how to actually use this data in a live fire exercise. So for me, as like an analyst and as a professional, in many ways, I'd kind of, sometimes you've just finished a game. And once you finish the game, you're ready for another challenge. And, I wanted to start my own business, my own shop, because, there's not many people who've done the proof of work that I've done. And there's an opportunity there, right? It's one of those things you see a gap in the market. People enjoyed our content, the work that we were doing, explaining how these tools work, how it actually describes what Bitcoin is doing. And I thought, you know what? I want the challenge of not only continuing to do this work and pushing forward and innovating in the Bitcoin on-chain space, but I wanted to challenge myself to build a business. So me and my mate, we've essentially spun this thing up. So there's two of us behind the scenes, and it's been a fantastic transition. It's basically a Substack at the core. And it's priced so that it's not the cheapest newsletter, but it's also not expensive. It's not like $100 a month, right? So we're an accessible newsletter, but the idea is really to help people understand. Our tagline is "We're your Bitcoin personal trainer," and the concept is volatility makes Bitcoin uncertain, right? It's hard to hold it because it goes up, down, left, right, sideways. And the more that it moves, the more you're like, shit, is it over? Like, is the bull market over, or is that sell-off it? Or, should I buy this dip? And the idea is not to tell people, hey, yes, buy this dip. It's to say, if we got a dip here, it wouldn't surprise us. If we were to bounce from this point, it wouldn't surprise us. The idea is to try and just give, that second opinion. So you kind of have like the personal trainer, but also we teach people what the metrics do. So it's a bit of a combination. It's education. It's like, being very upfront. I don't know what the future's going to do, but let's try and narrow down our possibilities as best we can.
Yeah, in that vein, I just watched your most recent video that I think you released a few days ago, and some of your recent tweets alluded to the same thing, that we're seeing unusual inactivity, as I would phrase it, in Bitcoin right now. And then so you kind of reeled it back and looked at the charts over the years and found a couple of different cases where this is what happens, where everything kind of balances out for a period of time, for weeks, maybe even months. But you described it as a coiled spring. And I think what's on the back of everyone's mind right now is like a coiled spring can go in either direction, right? What are you looking at here as far as like, what do you think? What are you foreseeing as far as which way this spring sprungs?
Yeah, for sure. Sprungs. Yeah, no, let's get some invented words in there. It is interesting. So generally speaking, right, there's a few principles that I use in markets, but one of them is that range contraction, consolidation leads to range expansion. When the market coils up, it doesn't stay there. It generally wants to move. And we could look at this from a few different measures, from volatility and price. We could look at it from, in fact, one of my favorite metrics, which I cover in that video, we call it the sell-side risk ratio. And it's a very simple construction. In the numerator, it's just a ratio between, in the numerator is realized profit and loss. So think about that as coins that are moving and being spent at a large distance from their cost basis. Okay. And then in the denominator, you've got the size of the market. How big is Bitcoin? So if you think about that, it's like the disturbing force divided by the size of the object trying to be moved. So very, very high values means that lots of profit's being taken. And what is that telling you? That people don't think the market's at equilibrium. If people are taking chips off the table, they're like, I think it's probably getting overheated. And likewise, when people are panicking, they also think, shit, we're going much lower. So they keep taking losses because they're like, I need to preserve capital. When you get to environments like we're in at the moment, where you've got essentially all of the coins transacting have a cost basis, plus or minus 5%, all the profit's been taken. All the losses have been taken.
So that's where we're at right now, is plus or minus 5% on most of these coins moving.
Correct. The market needs to move somewhere, up or down, in order to incentivize people to spend, right? Because you either have a sell-off and people go, holy shit, it's over, and they start panicking, or you get a nice rip to the upside and people are like, all right, back to profit-taking mode. So the market is telling you that this range is more or less exhausted. Now, in terms of direction, ironically enough, and the piece I released was basically saying, look, under the surface, under the hood, if we just take like a medium-term view, medium to long-term, it looks fantastic. I mean, Bitcoin, it's one of the most resilient uptrends I've seen in a very long time. Structurally speaking, bull. However, in the short term, and this is not saying that it has to happen, but in the short term, there's just like that early sign of people being like, yeah, it is going up. I'm going to put on a bunch of levered longs. And I'm going to buy a bunch of calls. So what my piece was saying is like, just be prepared and just, think about it if we got a sell-off, we may well be headed higher after we've taken all these guys to the cleaners. And markets just like to do this, right? When yes, their thesis was correct. You're just not going to be on the train, right? This is how they work. They take out all the levered longs, just go down enough to wipe them out. And then the thesis continues. So it wasn't saying that's what's going to happen. It's more saying like, if that was to happen, don't be surprised.
I think this is a good truism for trading and a caution against it for most people. If you're an expert,
markets are cruel, man,
and you've been at this a long time, the more humility you sense from a person like that. Like the more experience someone has in markets, it's almost like the less confidence they emanate because of that maturity. And it just the principle of you can be right. You can be correct in your thesis about where this is going, even on medium-term timeframes, 3 months, 6 months, 1 year. But that doesn't mean you're going to win trading. Yep. And man, does this play out time and time again. And I think the other message is that success can be dangerous. 9 times correct in a row can actually set you up for more losses on number 10. And that is what lulls people into comfort. Oh, I'm this whatever kind of trade. This swing trading thing has worked great. It's pretty easy. Look at how this works. Look at the TA. Look at all the success I've had over the last 6 months. And you're getting fattened up. You're getting supple and ready for butcher. And you have to be very careful. And so it's just a good message of yours that the market often moves to inflict pain on the uninitiated.
And this is exactly why when you start seeing, and a lot of traders will be like, when I start seeing TikTok videos of people being like, I quit my job because all I do is I buy here and I sell here. It's like, it's so easy, right? And when you start seeing that, you're like, okay, so you're telling what that signal is that the least sophisticated people feel like they can't lose. And that's telling you that the market is probably a bit steamy.
Yeah.
Right? And that's the time to be getting out.
Real estate's got to be completely fucked right now because I feel like that's all that's on TikTok is people talking about how they flip properties. And I mean, it's like 2008 all over again, it seems.
I mean, talking about 2008, we here in Australia, we've taken the 2008 playbook and run it line for line, just absolutely line for line. And the government
you guys just handing loans to anybody right now?
Handing loans to anybody, and not only that, right? So they're saying, okay, we've got a cost of living crisis. The housing market keeps going up, rent keeps going up. I know what we'll do. Let's allow all of the people who want to buy their first home to dip into their 401ks and use that to buy property because that's going to fix the cost of living. It's like, yes, let's stimulate demand.
Yeah,
let's stimulate demand as much as we can because that's going to make them cheaper. So yeah, it's nuts.
Yeah. I have a general just on-chain question. It's going to be a two-parter. First of all, we're a little backwards in order here, but I think it might be worth it for some novice listeners because after all, there are a lot of new people in this space and we need to remember that. First of all, just give a quick overview of what on-chain is, even though I know we just explored it. Like, what is it? Yep. What does it mean? Why is it important? And then part 2 of the question is, in your view, at this date and time, is the fidelity, quality, and helpfulness of on-chain analysis steady, deteriorating, improving? What's your high-level view on how useful it is? Obviously, you do this for a living, but define it and then talk about where you think it sits right now in terms of importance of analyzing this asset.
Great question. So essentially, Bitcoin is a database of who owned what and when and all the transfers of that ownership over time. So what on-chain analysis is it's essentially pulling that database, processing it, turning it into actionable information. And what we were talking about before about people who always lose, right? This is just the nature of the beast. Markets, someone has to lose. I like to look at on-chain data as a contrarian indicator. So it is essentially a set of tools that show you when the smart money is exiting at a profit. It's a tool that shows you when the dumb money who bought those coins high is now capitulating at the lows. So we can, from that information, we can look at when they bought, what the price was, how long they've held it for, and we can use these things. Like, I don't really care if someone who bought yesterday sells tomorrow. I do care if a whole bunch of guys who bought 2.5 years ago at the arse end of a bear, I care about when they start selling because they're pretty smart. They've been around for a long time. They look experienced. So you can use like heuristics to like bundle up certain amount of coins, but like these are our long-term holders, these are our short-term holders, and you can use this to look for when are they locking in profit, locking in loss, spending in large volumes, all those kind of dynamics. Now, in terms of the fidelity of it, I went in, I mentioned I started at Glassnode in 2021, and very quickly there was a lot of people saying, on-chain data is not going to be useful because all the coins are traded on exchanges, right? And I was like, okay, cool. I'm going to go into this 2021 cycle with that as like a backdrop, being like, I suspect that we're going to lose fidelity. And strangely enough, and again, people can take my word for it or not, I've spent a lot of time thinking and looking at this data. Yes, a lot of trade volume, most trade volume happens off-chain. In fact, all trade volume happens off-chain, right? There's the occasional guy doing a peer-to-peer trade in person, but it's not the majority. The vast majority happens in spot markets. And yet, when you put this stuff to the test, what a lot of people miss is that every single day, there's billions of dollars of Bitcoin being deposited and withdrawn, both directions from exchanges. So the net flow, same as ETFs, the net flow may be like, I don't know, 10,000 Bitcoin, right? 5,000 Bitcoin. We see this regular on the net, but the total deposit withdrawal volume is like 10 to 20, 30 times larger than that. So every single one of those coins is carrying a signature. Who deposited and why? Who withdrew and why? So interestingly, I would say the fidelity is actually much the same. Most people think it has deteriorated, and I truly believe that that's why so few people have gone down this rabbit hole of actually really exploring what this stuff does. It's super, super useful, and especially actually for the humble hodler, right? Because it just gives you a toolbox to know when shit's getting a little bit overheated, and also when we're getting to seller exhaustion near the bottom of bears.
Where do you think? Go ahead.
No, go ahead.
I was going to say, where do you think we are in the cycle right now? Give us a hard and fast, Willy Woo, multiple $100,000 prediction, if you would.
Dude, I was saving the Willy Woo jokes for later in the episode, man. I was just open up on him right now. Poor Willy Woo, dude. We just use him as a punching bag on this podcast because he literally, like, the both of us subscribed to him in like, what was it, 2021 when it was like 60 grand. And he was like, this thing's going to 150, and we were both like, dude, did you read the Willy Woo? So we were both like, yeah. He's like, yeah, and basically it all blew up on him.
It went to 29.
Poor guy. He's a great guy, I'm sure.
It was either going to be 329 or 29, and it was the latter. Yeah.
And look, just to touch on that point, I mean, I was writing the newsletter for Glassnode too, and I that's why I went back and reviewed what I was talking about in my early first couple of editions. And the what I was looking at in the on-chain world is that we were getting a slowdown in long-term holder spending, right? And the argument there is that that's like taking the weight off the bulls. There's not as much sell pressure for them to get through. But what I didn't think about is two factors. One was GBTC, which had gone from a premium to a discount. So that removed a 660,000 Bitcoin bid from the market, like overnight. So suddenly you've got less spot, accounting for all the leverage positions that were in there as well. And then the last one is that derivatives. I mean, derivatives, we barely had any data for. Like literally the data was like 6 months old at that point in time. And, just understanding what is a leverage washout, what is a deleveraging, right? I mean, I'm a civil engineer. I got to learn this shit too, right? So it's a live fire exercise. So anyway, there was a lot of people who got that first sell-off wrong in 2021 in May. But as far as I'm concerned, the most important thing is to learn those lessons and then move forward, right? I forgot what the actual question was there. Oh, where are we?
Yeah.
So I generally break down the market. I try to use like simplified terms just because it helps more people understand. When you come off the bottom, like FTX, you're in like an uncertain recovery. You could collapse at any moment, and people still have like stacks of PTSD from the bear market. Every like peak is like, oh shit, it's back, it's over. We've kind of got through that phase, and when we broke through about 30,000 in October, the average investor was back in profit. And that you really saw sentiment shift, capital inflows increased, people got excited, oh shit, the ETFs are coming. Then the ETFs went live. So that phase between the uncertain recovery, so between 30K and where we currently are, you can call it excitement or enthusiasm or something in that ballpark. But in terms of market structure, it's what I call quiet and trending. We literally stair step. We rally, we go sideways. We rally, we go sideways. And it's super boring. We opened this up by talking about how fucking boring the market is, just going sideways and doing nothing. And strangely enough, a lot of people get shaken out by boredom. Boredom is like a legitimate pain in markets that you're sitting there waiting for something to happen. And what do people do? They put on levered positions because they're bored, and they start just like betting around the edges, and they just like slowly deteriorate their account. And then the rally goes and they've lost 30% because they're still getting destroyed in the chop. So that's a very common thing. But I believe we're somewhere on the cusp. And again, this always happens as you break previous all-time highs, which we're in the process of doing. Yes, technically we did, but we're it's a process. Once we start to move above here, I think we're on the transition between that excitement and euphoria phase. I've done a lot of studies trying to be like, is this the top? And of course it could be. We don't know. It may be. I don't think it's probable. I think it's a less likely outcome. And actually, I wrote a report saying why the market condition right now is actually very similar to what we saw back when I got it very wrong in 2021. And again, I may get it very wrong again. But the market condition is quite similar. Long-term holders have stopped their spending. We've seen, but what I did do is go and have a look at GBTC, and I had a look at derivatives, because those are two things I missed. So let's make sure that there isn't like another GBTC out there. And let's also make sure the market isn't highly levered up. And what I came across is that it's probably not. We don't really have that massive supply overhang, like switching over like GBTC.
Yeah. What about Mt. Gox, though? You have the Mt. Gox coins potentially.
Yeah,
who knows what's going to happen with those?
Yeah, exactly. So my understanding is they get distributed between now and October. There's 140,000 or 141,000 Bitcoin. Let's think about the profile of people who own these coins. First thing, and to the best of my understanding, they changed Japanese law to get the coins back rather than fiat. The standard approach would be to liquidate and then get the fiat. But they actually changed Japanese law to get the Bitcoin back. There's been entities out there who've been buying claims for cents on the dollar for years. So if you wanted to sell, you probably have done. Yeah. So who's left? People who are waiting to get their Bitcoin back, are willing to wait a decade to do so, didn't sell for cents on the dollar. When they get their Bitcoin back and their Bitcoin cash, because they're going to get their Bitcoin cash back, what would you do if that was you? I would market sell the Bitcoin cash, pay whatever taxes I had to do on it, and just hodl the Bitcoin because I'm a hodler, right? And
is there any information out there about what percentage of those coins were bought out by somebody else? Because it would stand to reason in my mind, at least, that most of those companies or people, whoever did buy people out, would probably cash out because they're in a huge profit.
Agree.
Who knows?
That's correct. So that's my primary case. Now, don't quote me on this, but Alex Thorne from Galaxy Digital put out some great research recently, and I think they're going to be a good follow, actually, for this event. It's a full-time job tracking like what the legal proceedings are and all that kind of shit. From memory, on his table, it was like 30,000. There was two entities. One had 10, the other one had 20,000 BTC. But I agree, they're probably the most likely. I think some of them have signaled that they're going to hang on to them, but like any company, right? They were there to make a profit. They bought them for cents on the dollar. So that's where I would expect. So, if we saw something like 20 or 30% of those coins get sold, that is in the ballpark of what I think is expected. Okay. The rest of it, just hodl. And remember, if you're still in Bitcoin, right? You lost your coins in Mt. Gox. Have you been sitting around just waiting for those coins? I will not buy anymore until I get my Mt. Gox coins back. I'm not doing it. No, they've been stacking sats as well. They got UTXOs all over the place. So I just don't think the sell side overhang is as big as many people will pitch.
Makes a lot of sense, yeah.
Have you been paying attention the last few years? If so, you know one thing. Not your keys, not your coins. This is a quaint saying, but it's real. If you're not holding your seed keys, you have a Bitcoin IOU, not Bitcoin. CoinKite is the maker of the Cold Card Mark IV. This is the industry standard for holding the keys to your Bitcoin. Holding your keys should not be intimidating, and it isn't. The Mark IV makes this an incredibly simple process. You could be a degenerate firefighter and hold your own keys. That's how simple it is. If you want to create a more complex setup, the Cold Card Mark IV has you covered there as well. You can create a multi-sig using a cold card, a tap signer, and even the upcoming Q1. Speaking of the Q1, If you want to have every bell and whistle and give yourself no boundaries as far as interacting with Bitcoin is concerned, the Q1 is your signing device. CoinKite makes some of the most sought-after gear in Bitcoin. The block clock, seed plates, the open dime, and the Sats card. Everything you need to secure your Bitcoin. Use code BCB for 5% off the Mark IV.
So just to close out that question, market looks really healthy. I mean, we had a 20.4%, but we haven't had a 20% correction since FTX. I've never seen this before. I mean, no one's seen this before. It's quite literally the first time we've ever had an uptrend where we haven't even given back 20%. So there's something underneath us that's just been absorbing coins. And it's probably many somethings, but you're starting to see. American Hodl put out a good tweet the other day. There was one of the, I can't remember, like Wisconsin or one of these pension funds that started buying. He goes, "This is the most boring video that has ever been made in the history of boring videos. And what it's telling you is the most boring people in the world are now buying Bitcoin." He's like, "That's bullish as shit." And it is, right? The size of these things, the most boring money in the world is slowly coming to terms that this kind of makes a lot of sense.
Yeah. I mean, those are the same people sitting at the table holding the bags of treasuries right now who, whether or not they realize it, probably can't easily squirm their way out of it. And so even taking small exposure to what they view as high risk assets could balance that out for them in a way that, could save their asses. It makes a lot of sense. Using
words like diversity and, sharp ratios. And that's the thing, right? When you bring Bitcoin into their world, and I've got some charts on my website where you can actually compare the sharp ratio. And there's like this dirty, colorful smear down the bottom, which is just all the traces overlaid with each other. And then Bitcoin's just this big orange line sitting well and truly above it on any metric you want to look at. So it's destroying everything on sharp ratio, Kalmar ratio, Sortino ratio, compound annual growth rate, whatever you want to, let's speak their language. It's killing it. And that, at some point you can't argue with it. The numbers don't lie.
Yeah. There's this element of forgetting how quickly things are moving and the time frames in which this is unfolding. Like we've been around since 2017 paying attention to this. If you had told us that in 2024 you'd have massive pension funds, Wall Street fully involved, ETFs that are legitimately entrenched and exploded quickly and early and are going nowhere,
politicians,
Donald Trump talking about Bitcoin probably going to be the president. I mean, your
head would explode.
Your head would explode. And there's a point when diseases exit the laboratory or wherever they start where,
they always start in the laboratory. You know that.
Yeah, they do. A good epidemiologist. That's the person that studies disease, right? I didn't get that wrong.
Yeah, I think so.
Yeah. They would know when it's past the point of no return. They might try to pet the hair of society and pretend like it can be put back in the box. But there was a point
or cover it up.
With COVID, for example, when they knew everyone's getting fucking COVID, they're probably behind closed doors. You got a couple cocktails in them and they're like, yeah, this is so far gone. And we're way past that point at this date in time.
His time has come. Yeah.
There's no way that an asset like this can be this out there in financial circles and public discourse, et cetera, and not be marching towards a, dare we say, inevitable conclusion, which is that the price is going to go up over time. We don't know the short-term stuff, and you can't bank on anything. There's always black swan potential, but you forget that the human condition is such that you get bored, as you referenced earlier. You get desensitized to this stuff.
We're like a stone's throw from all-time high, and everyone's eating each other alive on Twitter because they're like, I have nothing to do. It's like, God damn it.
And stuff that would have been mind-blowing a few years ago just seems mundane today. But when you think about where this thing is at, and most people, if you just talk about retail and everyday interest, there's an element to where the word's just out there, as we just alluded to, but people just don't care that much. And they still have no clue what this is. That's what's remarkable. The word is known, but the actual significance of what's behind it isn't. And that's the mind fuck, and that's the virus itself. This is so much different than any other financial instrument available. And the constraints on its supply are so suffocatingly significant that, yes, it's quite easy to start getting really bullish on what short-term, medium-term moves could be in different environments. But yeah, at this date and time, you're just like, oh, whatever. It's just ranging around 70. It'll probably be here forever.
Yep. And the other, like, just speaking of the virus, like, gold bugs tried for decades to convince people that fiat money is fucked. And Bitcoin was the thing that actually got people to actually know what the word fiat
we stole
currency.
their girl.
Yeah, exactly. And and people have even said, like, Bitcoiners made the world start using the term fiat currency and actually calling it what it is, which is, dog shit. Gold bugs couldn't do it, but Bitcoin was sufficient to get people from finance to TikTok to start saying the word fiat currency.
I don't think people appreciate how much Bitcoiners have cucked gold bugs at this point. Like we are fully balls deep in their girl right now, and they just don't know what is going on. Like they just can't. There's no way they can stop it.
Their eyes have been pried wide open. They've been forced to watch the entire time, and some of them are still pretending like they're not victims.
I've told my gold.
They're pretending
story,
they're into it. Actually, is what it is.
Yeah, but I've still held a position in gold for a long time, right? But there was this time when I was like, because the gold shares you can own here, again, it's an ETF, so it's it's custodied gold. But the idea is you can actually go to the mint and the Perth Mint and actually get your gold bars. So I was like, I'm gonna just like see what it would take for me to take my ETF from my share account to a physical nugget in my pocket, right? What would that take? And I emailed the mint. They got back, customer service was 2 days, but that was okay. I was all right with it. And I was like, okay, they're going to charge me $180 per ounce that they want to mint. And then you've got, I'm like, oh, can I get, because they've got different types, right? The nice cast ones, which go in like a little seal-proof packet. So I have 1 ounce of physical gold, and it's in like a little tamper-proof packet. And if I remove it from that packet, it's going to lose its verification, right? There's no, that's the node. The node's there to check with the serial number. So I can't even hold
plastic bag,
Yeah, so it's a little plastic box. I can't even hold the gold, which is kind of what I bought it for. If I remove it, I'm going to lose like $300 from the value of it straight away. If I want to get these bars minted, they don't do that. They only do like the shitty, like the least verified gold nugget. So you're going to lose money on that side too. And then you got to fly to Perth, pick it up, go through the airport holding a pocket full of gold, come back. And I'm just like, I'm just going to buy Bitcoin. And within 3 minutes, I've got Bitcoin in my vault. And strangely enough, yesterday, an ETF just launched in Australia, the monochrome ETF, which is the first Bitcoin ETF in Oz. And you can withdraw from that as well. So it actually has a withdrawal feature, which is pretty.
You can withdraw
neat.
Bitcoin from it?
You can withdraw Bitcoin from it. So if you kind of put all that together, it's like, so you're telling me I can get a scarcer asset that has bigger upside, and I can withdraw it directly from the ETF. I don't have to fly to Perth and get some guy to pour a cast bar. It's just is it a 10 times user experience improvement? Yes.
I can't help myself here. We had this conversation with NVK about gold dildos because there was an Indian dude who was trying to leave India with it. I'm wondering if Perth Mint will actually mint you a dildo-shaped gold bar so that you can leave the country.
I mean, it would be a bit of a collector's item, right? They should go down that line because, I mean, strangely enough, I saw, it was a little while back, a couple of weeks, they had like Trump collectible silver coins. I'm like, that's just a fucking NFT. The gold bugs are trying to get into NFTs because like that's the only way we can save our bag.
You could do some kind of gold dildo verification process where, you give someone a description on exactly where the vein needs to go. Like it needs to be 8 degrees offset from the head of the shroom on the backside. And if they don't get the vein in the right, they don't get the vein in the right spot, it's
sealed
bullshit.
tape while it's inside. So once it's pulled out, it's unverified.
By the way, James, the way we go about these podcasts, and if you're talking and you see one of us just suddenly just crack a little smile, the entire conversation is sifted through when can we crack the next sex joke.
You're looking for the next dildo insertion point.
Yeah, that one was that one's a little on the nose, I think, but it'll
when Josh gets an idea though, I can see it immediately in his face that he's got a zinger.
That's a 1 ounce vein.
Zinger. We haven't done this in a long time, but I actually want to pick your brain a tad bit on Ethereum, and I don't know how much attention you're paying, but when they made the proof of work to proof of stake transition, you were the person that we paid attention to the most. It's not that we talk much about Ethereum, but even for a person focused on Bitcoin, it was a great thought exercise and why proof of work is so important. And you did a marvelous job thinking through both sides, trying to be fair to Ethereum, but being very concerned about their move away from proof of stake. I guess first question here, do you still pay any attention to Ethereum? If you do, give us an update for Bitcoiners that don't pay a ton of attention. How's the transition going? What concerns you? Why is price holding? I don't, wherever you want to go with that.
Sure. Yes. I mean, I completely exited my Ethereum position following the merge because, and essentially I've held it for a long time, and I've enjoyed the mental exercise of thinking about the decisions they're making. And it's one of those things where it's like when you have a friend who's always wrong, it shows you like it's just as useful as a friend who's always right.
It's a good compass.
And exactly. So I held, and again, I wrote a piece on this recently called the flip floppening, because essentially I've never flip flopped so many times on like, is it actually the best thing since sliced bread, or is it a house of cards? And over time, right, because I entered the space like anybody else, you're like, oh, Bitcoin's a boomer coin. It's not going anywhere. It's going to get overtaken. And then slowly over time, you're like, oh, hang on a second. Everything else is fucked and Bitcoin's going to be just fine. And you eventually reach that as your conclusion. Nevertheless, I found it to be a fascinating mental exercise that's sharpened my Bitcoin thinking by just like reasoning about and like trying to understand the design decisions that they made, what the consequences are, and how it's playing out. And you know, I sold everything after the merge, which was, given the ETH BTC ratio, was a pretty good trade, and it was a good trade, one of my best trades of all time. Would I ever buy it again? Absolutely not. And I wrote the piece saying it's just not for me. And the design decisions that they made, it's funny. In 2020, I was doing some reflection. In January 2020, I participated as the Bitcoiner on a bankless debate, which was like why Ethereum will not retain a monetary premium. And when I wrote that piece, you know, there was a couple of key elements I looked at. I was like, basically, at the root of it, it's not that your money supply is getting smaller. It's not that it's deflationary. It's not that you can tinker it to get it lower. It's that you will never, ever get away from the desire, from a technical, economic, whatever desire to stop tinkering with it. You will continue to tinker with it endlessly. Sound money's got nothing to do with how many coins. It's got everything to do with what's my expectation of how many coins there will be?
Exactly.
So that's the core thesis. And Vitalik himself was one of those like 6 guys who came through and did a rebuttal to it. Vitalik himself saw fit to actually debunk my article, and he opened his response with a screenshot of my tweet, where my tweet was saying something to the effect of, "It's not about how many coins; it's about the humans tinkering with it. Get your hands off the button." Basically, was my tweet, and he goes, "And we will." His response to me was, "And we will. Once the monetary policy stabilizes after proof of stake." And I was like, okay, this is back in 2020, right? So I went and I found that I didn't actually remember that he'd used that tweet as his opening argument. And there's a podcast called Uncommon Core, which is like gigabrain Ethereum level stuff. Very smart guys talking on it. And there's an episode they did recently called The Staking Endgame. Now, it's very technical, but it also sounds a lot like an FOMC meeting where they keep tinkering, saying, but the economics have changed like this, and maybe if we change the dials like this, and what we're going to do is we want to target a certain amount of stake. So here's a fun fact for you. They are currently in the process of, get this, right? You move to a proof of stake protocol. Prepare to be surprised. They're surprised that so many people want to stake, right? There's too many people staking now. So what's happening is the network, there's too many like messages being transferred around the system, and they're getting out of sync, and they need to actually stop the number of validators. There's too many of them, and they've got a whole lot of shit they're going to do to solve that. But it's like, didn't you guys think that's people are going to stake? Like empirically speaking, every proof of stake network gets to like 60, 70%. They're like, we think that getting above like 50% could be a problem. And eventually if we get to 100, they're realizing, and this is like at the protocol level, they're talking about at like the Ethereum Foundation level, they're talking about, well, if we've got 100% of stakers, right, which is technically not practical, but if you've got 90% stakers, well, essentially that 90% is taxing the 10% who remains. And they're talking about They're talking about who is going to get taxed. So what they're tinkering around with at the moment is, well, we need to think about the real yield, because if 100% of people stake, then the real yield is 0, because if everyone's getting 2%, then everyone's getting 0, right? It's the same thing. So they're literally reasoning about, can we go should we go negative inflation rates? Should we tax? Who are we going to tax? And it's like, guys, you're never going to solve this problem. There is no optimum. The optimum inflation rate is one where everybody knows what it is. That's it. Let the market evolve, because every time you change the rules, the market has to
Everything has to reorganize. Yeah.
You're going to get new economic conditions. And suddenly you're like, oh, fuck, that thing we didn't think about, I don't know, people staking in a proof of stake network, that thing we didn't think about in the head, maybe we need to tweak that dial.
You're always chasing the end of that rainbow,
What is optimum?
You change the trajectory, the vector changes, and then everything just, changes with it. And there's no way you can ever predict how it's going to change prior to the change.
So that's the thing, right? Sorry, just to close out there, my view comes from a place of I find it intellectually interesting to follow the thread. And the more I go down the thread, I'm as an external observer, guys, you got to probably just have a look in the mirror and be like, you're not going to get there. The problem is you keep tinkering. You will always find a reason to tinker.
If you were Vitalik and you had control of Ethereum, how do you think you would solve this problem?
I would have walked away after the merge. No, seriously, I'm amazed that he didn't. Because I wonder though if they could somehow
prove that is there even a way to prove that you can't change things? Is there a way to give it some finality?
It's the same as Bitcoin ossification. It's a asymptotic concept, because does Bitcoin ossify? Well, it does until we get any kind of change. So it's it's one of those things where there's not really a definitive, is it finished? Is it closed out? Bitcoin, you could say, is pretty complete. But it's going to change again at some point, right? There'll be some evolution that we need to put through. So it's ossified until it hasn't. So I don't think you can really do that. But yeah, I think the challenge that they have is they've got so much reliance on people changing it. And the more complexity that they have, the more they need to continue to tweak it. And I think they're in a very unfortunate position. The project is in a very unfortunate spot where it's not Bitcoin. Right? It tried to beat Bitcoin like a younger brother who was trying to outsize his older brother. It tried to be a monetary asset. And the problem is that what it did there is it sacrificed a lot of the usability side of the equation, right? To be an expensive money, you sacrifice scalability and costs and all the rest of it. And now they've got competition from the other side, which is, and there was another great Uncommon Core podcast where they talk about EVM versus SVM, Ethereum versus Solana virtual machines. The best way, and it was a real light bulb moment for me. Again, really high level complex stuff. I'm not going to even pretend to admit I understand half of it. But single core computer is Ethereum, multi-core computer is SVM. I'm not saying that Solana is better than any other shitcoin. I'm just saying that you're in a world where is a single core computer ever going to compete long term with a multi-core computer? And and then you say probably not, right? You're up against endlessly improving technology.
Yeah.
So you kind of look at it from that perspective, and you're like, I just came up with this very, very simple test. If Ethereum launched today, would anybody use it? And I really struggled to answer in the affirmative. Yeah. So then I went down a bit of a rabbit hole, and I was like, are we seeing, because it's got liquidity and network effects and all these things, are those strengthening, staying steady, or weakening? And it's undeniable that it's weakening, right? Yeah. And the only case you can actually make, with any kind of true honesty, is that, but look at Base, right? Base, which is Coinbase, they're fucking L2, which is just literally Coinbase, guys. So by saying that Base is showing off Ethereum's network effects is the same argument, in my opinion, as saying that Binance is scaling Bitcoin. It's the same argument. It's no, Coinbase is winning. Ethereum is just an unfortunate soul that thinks they're still winning, but their network effects are just declining. And it's very obvious to me. And it looks to me like a case where until you recognize the problem, you ain't going to fix it.
Right. Yeah. It seems at the outset, the problem with it inevitably is that they're trying to be everything, right?
Correct.
They're trying to be, the quote unquote, the world computer. They're trying to compete with, much more niche, better designed for their niche, like Solana or Bitcoin, because Bitcoin is sound money, right? They want to compete with Bitcoin on sound money, but they also want to compete with Solana and Tron on, running a bunch of shitcoin operations, on the third and tertiary levels or whatever that is. They can't be all of that at once. And so I think they've just never found the proper product market fit. And they're just constantly trying to swing this axe around to hit something. And they're just whiffing.
And that's the other thing I put in my flip-floppening write-up is, I've been using, or I haven't used it for many years now. I used DeFi protocols before, like gas was like 1 gwei. It was like super cheap. So I was using it for a long, long time. And when I was talking about that best trade, right? One of my best trades was using Ethereum tools to lever up to buy more Ethereum shitcoins, right? And that was like one of the best trades I ever did. But then when I really honestly, truthfully look at what I did, and I'm like, would I ever need those services ever again? The answer is unequivocally. The only thing I ever used it for was to lever up and speculate on tokens. That's it. That's the only thing I used it for. And now I'm in my kind of, I'm at a point where it's like, I don't have any desire to do that anymore. I don't feel the need to speculate. And once I remove speculation as a use case, I can't truly, honestly convince myself that I need any of this shit. And that was like a moment. It's like, even if Ethereum fixes all that technical stuff, I still don't need their product. So you're like, well, why would you? What are you doing here?
Swan's mission is to help millions of people get into Bitcoin. So they built the fastest and easiest way to get started. It's just a matter of minutes to sign up and start buying Bitcoin with the Swan app. Introducing friends and family to Bitcoin has never been easier. And Swan now has 0 fees on the first $10,000 worth of Bitcoin buys, so it's free to get started. But don't worry. If you're already a Swan client, your next 10K of buys are also free. If you love to recommend Bitcoin, and I know you do, Swan is a no-brainer. You can now take a friend from zero to Bitcoin in one quick conversation. Just tell them to search for Swan Bitcoin in their app store. It's really just a few minutes and completely free to get started. Again, search Swan Bitcoin to download the app. Bitcoin 2024 is moving to the heart of Bitcoin country, Nashville. Nashville just feels like the proper place for a Bitcoin conference. I can't guarantee we will be on main stage, or side stage, or even performing a puppet show. I can, however, say that we will be hanging out with the plebes. And if we have no obligations, we will very likely be getting drunk. Bitcoin Magazine is introducing a new event this spring, Bitcoin Asia. It's shaping up to be an unmissable experience. Stay tuned for more info. Whether you want to visit Bitcoin Asia or Bitcoin 2024 in Nashville, we have a coupon code for you. Use coupon code BCB for 10% off any ticket to either event. That's code BCB.
Yeah. There's a temptation to think that super intelligent, high-tech conversation and discourse means that what's being output is useful. And that can be a very costly misnomer. Like,
yes.
At the end of the day, Greg Foss used to say so-and-so is too smart by a half. And Josh and I are constantly skeptical, but there is an element where sometimes not knowing all the technical details and just thinking first principally about what works in money and markets allows you to potentially, I'm not going to say this for sure, but understand more than the people that are way down this borderline useless tech rabbit hole. Also, complex solutions need to solve basic functional problems. It doesn't matter how cool it sounds and how well researched it is and thought through. If it's not solving a foundational basic problem for broader society or money in general, it's not going to have utility and it's going to fizzle out. And I'll close here on this. And as we've been around Bitcoin longer, I've thought more about just the use case of decentralization. And I would say my overall thesis is that robust, true decentralization has fewer use cases than most people realize. It's very limited what's actually useful for a radically decentralized network. And flimsy pseudo decentralization is almost useless. You might as well just centralize. And that is sort of the essence of if we use the word maximalist argument. Right. And it points to why Ethereum has the potential to be largely useless. It's not accomplished. its decentralization grows flimsier and flimsier, and you nailed it. If you started over today, what problem is it solving? What is it doing better than the other thing in the arena it's trying to win in? And that list is dwindling for sure.
Well, here's a counterpoint to because a lot of Bitcoiners will say that Ethereum is not decentralized, right? Let's flip the script for a second and just think about it from the other angle. What if Ethereum is too decentralized? In the sense that you could argue it's probably one of the most decentralized shitcoins, but if it's too decentralized, you don't need computers on every corner of the globe, with all of this security and all of this fucking high-tech shit. If you're moving around Tether, which can be frozen by Tether, if you're moving around bonds, which can be frozen by JP Morgan, you don't need all of this complexity. You don't need the sheer scale of what they've done to actually solve the problem, which is that the whole DeFi thing falls apart. We discovered with Luna, you're never going to get away from centrally issued stablecoins. Your whole financial system doesn't work unless you've got dollars. So therefore, who is your validator? Tether and Circle.
Yeah. And well, here's another thought to pull on that thread a tad. If you just think about practically, what's the essence and the point of robust decentralization? It's to inhibit the ability to make hasty change or frequent change. Could be one definition you use. Ethereum changes quite a lot for what it's trying to accomplish.
They've got a hard fork scheduled in at all times. They've got another one scheduled in for like next year. So
you're kind of in a world where they're trying to build like a 12-foot thick, 60-foot high castle wall, but they have a gaping 40-foot just entryway in the rear, where it's like, you got these nodes that are spread out, but when you look at it and when you get down to brass tacks, they change the thing all the fucking time. And this is where maybe a more simple-minded fireman could have the upper hand. It's like, how do you measure decentralization and the immutability of a ledger? Does it get changed?
Factor? Does
it get changed? Can it get changed? And this thing over here is changing an awful lot.
And who has
this
the
thing
ability
over
to
here
change
isn't?
it?
Yeah. Yep.
I mean, it doesn't matter. In my opinion, just looking at it and not having a super deep understanding of it, because I lost interest in it years ago, it doesn't really seem to matter that they have, 5 to 10,000 nodes or whatever it is. I'm just making a number up. The fact that there's a centralized entity that can and will force the changes they want on the entire network kind of makes the rest of it superfluous.
Yeah.
Yeah. So let's bring it back to Bitcoin, right? Because I think the reason why it's important to study this stuff, in my opinion, and just have a bit of a gauge on what's going on, is you can then say, well, there's all your product market fit or lack thereof. Here's what it's like. Let's take that the changes component. Bitcoin at some point in time will have some kind of change. It could be a series of bug fixes. It could be a series of opcodes. There's a whole lot of things, covenants, whatever it is. There's going to be a lot of resistance, and it's only going to get worse over time from people who are like, but hang on a second, who's funding you? Who's paying you? Are you trying to slip something in? Like, the technical trust component is going to degrade over time, but there are also changes that Bitcoin needs to make to continue. Like, software must continue to evolve. So Bitcoiners are going to have to deal with this very interesting balance, because it's like, if the Ethereum Foundation says that we need to do this change, I don't believe there's more than 12 people in the world who could truly actually look at the code and reason about what they're doing. I just don't think there's enough human beings. Bitcoin would be much the same. There's probably more people who can reason about the code because there's fewer degrees of freedom. But at the same time, the average pleb, I have to trust the guy who wrote the Bitcoin software. I cannot verify that shit for myself. Most of us can't.
Yeah.
So there's this.
Good point.
Exactly. So there's these things where it's like, we have to really consider, how do we define trust? Because there could be a bunch of developers who have been held at gunpoint by the government and said, you're going to put these changes in, right? How do we deal with that? And over time, it's going to get harder and harder and harder. But it's important to kind of see these things and then bring it back to Bitcoin and say, okay, how do we make sure that we don't ossify because we're afraid of doing stuff, but we also need to have the checks and balances in place to be like, well, be aware that there are actors out there who would like to change things.
Yeah, no, that's a great point you brought up, which really brings back, and it hits home pretty hard, which is there's trust involved in all of this.
Yep.
No matter how much we want to say Bitcoin is trustless, well, you have to trust the developers know what they're doing and that they are honest about what they say they're doing, and it actually is what they're doing. Because there are so few people that actually understand what and can read the code and can verify this, that it's basically a cabal of people that we have to trust to some degree, or have verifiers that actually know what they're doing and can look. I could see people having an argument that, like, the AI revolution that we're kind of living through right now, there's a way you can have a bot look at the code and what does this mean? Like, explain to me in lay English what this means. But again, you're trusting that hasn't been compromised by somebody, so it's like this rabbit hole never ends. So, like, if you don't want to trust anybody, you're going to be a hermit living on an island, like,
Exactly.
throwing yourself into the water eventually, because that's just not how people live.
There's actually a good segue here in terms of this whole concept of trust. I've been thinking about how Bitcoin development and layer 2s and Lightning and Fedi mints and all these things. And whilst I'm not going to pretend that I fully understand these things at a technical level, I've been increasingly coming to a conclusion that the concept of Bitcoin banks is massively underappreciated by Bitcoiners. We've really gone down the path. And so Ethereum is the tangled mess that it is because it's tried to decentralize all the things. And I think the problem is that may not actually be the optimum or sensible design goal. So in a way, Bitcoin has the advantage of seeing what happens when you tie yourself into an actual pretzel by trying to be so decentralized that you're like, oh, but there's centralized block builders over here and there's centralized front ends over there. But like, if we decentralize them, we're putting them into this like twisted box, like it doesn't work. So this concept of, like, if you think about Lightning Network, what's the biggest problem with it? It's the user experience and the liquidity requirements. Well, your bank does that as a job. And let's face it, let's not kid ourselves here. And again, I'm 100% for self-custody, but I'm also 100% convinced that there is a 0% chance that everybody's going to self-custody. Full stop. It's just not going to happen. It's not a real outcome. And thinking that it is asinine. So I think that what's going to happen, people do require trust. And to be fair, Michael Saylor said this on, I think it was the Pete McCormack podcast, right? He's basically saying that who's going to build the roads? You need corporations and businesses, and the world isn't going to change on a Bitcoin standard. We're still going to have companies. We're still going to have banks. We're still going to have all of these entities because someone's got to do the work. And most people need to work for somebody. They don't want to have their own business. So my expectation, we think about what Lightning is, it works best as a hub and spoke model. Who are the hubs? Well, if I'm connected to my bank, they're connected to some other guy's bank, and that bank's connected to a merchant, you only need a handful of hubs, and every merchant's going to be connected to every customer. So, and globally. So if you think about it from that perspective, a Bitcoin bank for Lightning Network and like the business use case of it makes all the sense in the world. Yes, you can run your own node and plug into that network and be just as active. However, the probability that we're going to get something along those lines of Bitcoin banks, which is kind of what the whole concept of these eCash, whether it's Fedi or whatever else, this concept of like federations and like decentralized enough is, I'm increasingly coming around to this as a very sensible grounding anchor, right? Tron is decentralized enough to move Tether around the whole world. And they're doing it that's my other take about Tether. Tether is the US government. There is no way you get to be that big and have that many treasuries without the US government tapping on the shoulder and saying, all right, here's how this is going to work. So Tether is the CBDC. And in many ways, like Tron is just decentralized enough to do that job and like literally give dollars to the third world. So just like, what is decentralization? Well, it depends what problem you're trying to solve. And I think these are really nice grounding anchors to help people think about the Bitcoin world moving forward.
Yeah. It's also a good point, James, about things don't have to be perfect to be workable, Bitcoin included. So I think there's a misnomer, especially maybe when people get kind of manic and excited to think that Bitcoin's this perfect solution for money. It's not. It's got flaws. They're going to be here forever. It's never going to be spot on in every single arena for every single person. It's made by humans, so it's flawed, but it needs to be good enough. It needs to have, if we go Jeff Boothian, as you did earlier, it needs that 10x advantage in whatever arena it's trying to carve out market share. And so don't let perfect be the enemy of good on the road to better money. would be my message
and
there.
The L1, the base layer of Bitcoin is the store of value layer. It's the one that competes with the Fed, treasury bonds, store of value type assets. The base layer is the store of value layer. Everything above is where you get your mediums of exchange and all that expansion, the same way that Visa makes, FedWire commercializes it essentially. So you're going to get these things. And as you go up the stack, you lose some of that trust. But at the same time, people need trust to operate their lives. It's just part of we're humans. So I think that's a good framework to think about the Bitcoin world.
Yeah. Well said. Well said. What do you think?
I think we'd be remiss if we didn't at least ask you to throw a Hail Mary and just give us some quick jabs at like where you think this thing's going over the next couple of years. I mean, I know that's what everyone's listening for anyway.
In what sense? The people want to say when price?
No, like give us some idea.
Move.
Yeah. Where's this price going? Like, are we talking 150? Are we talking 5? Like Chamath is talking about $650,000.
Yeah.
In the next 18 months.
I have a standard line, right? The usual reason why I don't give price predictions is that they're completely fucking useless because like no one knows. No one knows what the future holds, right? We could have all sorts of shit going on. When I did a presentation at Bitcoin Alive, and if you're going to do anything to do with like price predictions, the easiest way to do it is to go down the path of fundamentals, right? There's different types of analysis, technical and fundamentals and on-chain. There's all sorts of things you can do. From a fundamental standpoint, if we believe that Bitcoin is competitive with gold, how many gold bars are there per Bitcoin, right, at terminal velocity? And it's about 10.8 kilograms. So, what's the price target for gold? Well, it's at least 10.8 kilograms of gold. And if you work out that math, it's like 1.2. In fact, it was probably more now, about 1.2 million Australian dollars, right? So that's where Bitcoin's like, in terms of like fair value, that's where we're headed. That's the road that we're going to go. Now, in this cycle, it very much depends, of course. Where we are at the moment, there's a lot of people who've looked at it and gone, it looks like, it could be a cycle top. And yeah, there's been a couple of things, but at the same time, when I really unpick what's going on under the surface, I think it's very, very healthy up here. It feels like we're actually pouring a foundation for the next move. So honestly, getting into the hundreds, I think is probably a very likely scenario. Getting up into the 250, I think is like, it's not improbable, right? 30% odds. So, that's kind of the ballpark. I would be very surprised if we capped out before 100. And I'd be very surprised if we capped out, I think 150 happens, because the size of Bitcoin at that point in time is still insignificant. And the other thing is that 10.8 kilograms of gold's going up as well. And will continue to go up. So you've got this like dynamic where it's like, you're targeting that 10.8 million kilograms, but the price of that 10.8 kilograms is continuing to rally. So,
right.
I think it's, they're going to print a lot of money. And I think that's just like, they're going to print a lot of money.
What's an interesting thought for me is like, let's just say you think like 150 is my price. I'm going to punch out with say some percentage of what I have because I want to take risk off the table. But what are you going to do with that money in the meantime? Because even if you plan on plowing it back into Bitcoin, you might have to sit around for a year or something. What do you put that money into to not lose it, but to not lose money, not lose value either? You don't want to sit on dollars for a year,
Yep.
Like
and I've
transferring some of that into gold is something that's been kind of ruminating in my mind for a while. Like,
no, I think a lot of Bitcoiners, ironically enough, will. I think a lot of Bitcoiners will take some chips off the table and buy the gold. And I think I've actually been spending a lot of time in most of my on-chain work is thinking about like the psychology. What is the metric showing me? Is it new buyers panic selling the bottom? Because that's like a psychological reaction. We all do it. When I think about what Bitcoiners are getting to, they're going to get to a stage where they don't want to sell their Bitcoin, but they also realize that they need to finance a house. A lot of people will be financing their first house. So the market's going to have to finance all these Bitcoiners' first-time buys. They'll never sell all their Bitcoin, but they will also move it into gold. And why would they move it into gold? It's the same reason that I foolishly owned gold before that point, right? I'm not going to sell my Bitcoin into gold. I already own the gold. And the reason being because like if I did need to tap my savings, I don't want to tap my Bitcoin. I will sell my gold if I have to. I'd rather not, but I will. It's the first thing to go. So in a way, it's like my savings that isn't dollars, right?
Yeah.
Because you want to keep your dollars as low as possible. So it's that like liquidity pool that I know is going to go up. I can tap it whenever I need. I'm not going to be mad if it's down 20%. I'm not going to be mad if it's up 20%. I don't really care. It does its job of just being there. So I think a lot of Bitcoiners will sell Bitcoin into gold for that purpose because they know it's also going to go up. It's the same trade, but it's not going to move as much. It's like a low volatility Bitcoin, which is kind of ironic.
Yeah. I love a low volatility Bitcoin.
Well, I mean, strangely enough, we've got one, right? But here's the other fun fact, right? I did a report on volatility the other day. Volatility for Bitcoin goes up in a bull market. So all these, and it goes down in a bear, which is very commodity-like. Because in stocks, you get high like the VIX spikes on sell-offs, and it goes back to this manipulated straight line higher every other time. And ironically enough, when people are like, oh, Bitcoin's too volatile, it's like, that means it's going up, guys. When it's volatile, it means it's going up. It's a good thing.
Very few can handle it. Very few can handle it. That's another
boredom and volatility. And the hardest thing for most people is going to be waiting and just waiting. And like I've got this other kind of thesis. I'm trying to think about who owns Bitcoin, right? Disproportionately, I'm sure your podcast downloads say the same. My YouTube channel, it's millennial men. That's like disproportionately the demographic, right? Rightly or wrongly. So when you think about what their kind of psychology is, what are they thinking and going through? They are all of them, right? If you're talking about millennial men, they are getting to the point where they need to buy a home, start a family, look after kids. They're going from like not having any kind of dependencies to having many dependencies. And their life is, so therefore their mindset is going to shift a lot more towards long-term stability. They're going to boomerize, right, over time. That's what's going to happen to many Bitcoiners. They're going to boomerize because they're getting into that age bracket where these things matter. So like there'll be a lot of things that will change, right? Self-custody will change. People will start to look more at like the multi-party custody because they're like, well, if I die, can my significant others and my loved ones get my coins? The answer is like probably not. Like if they've got to like climb through an escape room and like solve some golem level riddles to get to your seed phrase, it's not going to work, right? So I think there's a lot of like mechanics. Bitcoiners are getting older, and Bitcoin as a environment is going to evolve alongside us because we're the ones who actually make the decisions at the end of the day. And I think those mechanics are really going to start playing into the market dynamics, but also into the just the technical custody side of things.
Yeah, that's right. You go from, I like that point of the stage in life where you go from no dependencies to kind of max dependencies.
Yep.
Really, really fucking fast.
And simultaneously, your proof of work that you've spent so many years accumulating, just whack a 10x multiple on it. Suddenly you're in the stay rich phase. You're not in the get rich phase anymore.
Yeah.
Suddenly you're at the point where it's like, I have something worth protecting. I can't YOLO this shit into a ledger in my drawer. I can't do this anymore. Like I need to think a lot longer term about what I do with my life. And, you can't store like millions of dollars under your pillow. It's not practical. So I think guys are going to start really processing this moving forward.
Yeah, I think that's wise.
We get a front row seat to watching young men process dependencies at work. Hire a lot of, we've both been through it, but is it a joy, Josh, to watch dudes, run reckless and free, trips to Vegas, going all over the country. And oh man, when you have that first baby and then that second one comes, they're going to rip your fucking heart out.
A guy we haven't talked, well, I'm not going to give up his name, but it's Woj. I'm interested to see how it plays out for him. This guy literally goes on like 10 trips a year at this point.
It's insane.
It's great for him, but like when he does have a kid, it's gonna be fun to watch that fucking clamshell up.
He once told me about kind of ambitions of like taking the kid around and how they're gonna, a lot of off-roading trips. When we say trips, by the way, we need to define. We're talking all over the world, all over the country, weeks gone. He stacks our schedule is unique where you can kind of compress and then have lots of time off.
Got it.
He was making some adorable statements about bringing the kid along, and I just went with it. Yeah, for sure, dude.
Sounds
we'll
awesome.
see.
Yeah,
we'll see. Yeah.
Good luck.
I just got back from Tennessee with my 4-year-old and 2-year-old 10-hour drive, and it was a complete and utter shit show. Fond memories, but God damn it, is it limiting?
Yeah,
wow.
Physics kicks in.
Yeah, for sure. James, we always appreciate your observations. They are robust, well thought through, nuanced. You always think very clearly and wisely. So appreciate your observations. Why don't you end here by telling people where they can find you, your newsletter, and your work?
Well, no, and thank you, gents. I think I need to email the Perth Mint about the golden dildo. This will be my exercise for today. See what I can do. No. So
probably surprisingly, yes, we do offer that service.
Yeah, we do. We're getting increasing.
Whatever you want,
offers.
sir. When you have a kilogram of gold, you can do whatever you want with it.
There's all these strange guys who say that they want to sell their Bitcoin, but they'll only sell it for a golden dildo. It's a regular request. So as you guys mentioned at the start, I've gone out on my own. So we've got a Substack. Everything's over at checkonchain.com. We've also got a charting website, which has got pretty much all sorts of on-chain charts. It's all available for free. And the idea is trying to distill a lot of the lessons I've learned over the years into the idea is the site's built for me, but it should be something where you go on there and it's like, it flashes red when something important's happening, right? The idea is it's supposed to simplify the whole process. But once you're like, okay, I want to understand why it turned red, that's where you start to go down a bit more of the rabbit hole and you start looking for all these different confluents. And, hodling doesn't have to be hard. It can be, but understanding the volatility is once you understand why things happen, it makes it so much easier. I got this feedback so much when I meet people in person. Like, the videos help me understand why the market moves. And I don't care that it's down because I get it. And because it's down, I can understand, is this healthy? Is it not? Do I make a decision? So those are the kind of things I'm certainly working towards. But gents, it's been a pleasure. Thanks for having me back on.
Appreciate your time. We'll do it again.
Well, yeah, we will.
Good on you guys.
Anytime, man.
Take care, my friend.
Cheers.